Keith, please come up and share your perspective on how you are rocking the industry.
All right. Can everybody hear me? Thanks, Jeff. It's a pleasure to be back at Dreamforce this year. And it's great to be here this year seeing so many insurance faces. That's not part of the norm, but as he was mentioning, 3,000 customers is really impressive, and we're expecting that to double over the next few years. So CoverHound focuses on all the areas of the 5 areas of distribution, or 5 areas of disruption for the 5 Ds, but the 2 primary areas of focus for us is delight and distribution. So Reimagine Insurance. I love this slide that Jeffrey and the team gave to me, not because of the font or the Dreamforce logo, which is super cool, but because of the image that's behind it. To me, when I think of this image, I think of what the road that lies ahead of us, the road to innovation and the road to disruption. So what does that mean? The road to disruption is often, I'll go back just to make sure. The road to disruption, you often see, you can't see the end of the road. It often has lots of twists and turns, and it's not paved smoothly, so it's going to be a bumpy ride. But we feel like that's the perfect road for CoverHound, and it's not just because we're selling auto insurance. So what is CoverHound? CoverHound is the leading digital marketplace for property and casualty insurance, comparisons, and purchase. The last part of that is very important. We handle fulfillment. How do we do this? We offer the customer fast and simple comparisons based on matching, not spreadsheeting. We only display accurate rates from our carriers. We don't make guesstimates, and we don't do any screen scraping. And third, we make every rate that we display actionable. So it's available for immediate purchase either online or through an agent in our call center. So why do we exist? The best question of all. It's because customers are asking for us. They expect this from the online world and the digital world, but they're not experiencing that today in the insurance world. We're listening to today's shoppers, and we're delivering results, just like the screen capture you saw here from today. And here are what the results of our feedback are based on years and years of optimization and over 1 million quotes in the past year. So what do our digital consumers demand? They demand real choice and competition, and real choice and transparency. Our customers also demand a trusted advisor to be available anytime they need assistance. So anywhere in our shopping process, we display various 800 numbers along the process. So when a customer calls in and talks to a trusted advisor, they instantly have their data pulled up, and we can instantly be there to help. Buying insurance should not just be about saving money. Even though the billions of dollars you see every year in advertising is about saving money, buying insurance is so much more, and the trusted advisor and choice and transparency are a big part of that. Customers also demand a single point of contact and the ability to buy online anytime. And of course, personalized matches based on data captured from the shopper and not guesstimates. And last but not least, we do not spreadsheet. So what does that mean? A lot of carriers have approached us and say, we don't participate in spreadsheet marketplaces. We're not a spreadsheet marketplace. We're based on matches, as I said earlier. The matches are based on consumer data and us putting consumers and carriers in a win-win scenario, not putting them in a situation to fail. So what type of feedback are we getting so far? Well, one of the #1 metrics at CoverHound is Net Promoter Score. So we survey every shopper and every policyholder that comes through our website and through our call center. As of June 2015, you can see our Net Promoter Score was 75, and our overall customer satisfaction score for June 2015 was 97. To me, that's pretty damn impressive. It puts us in the elite of the insurance space with USAA and State Farm. But we're not settling there. That's just 1 month. We know to continually exceed expectations for our shoppers, we're going to have to always optimize the site, make it faster, make the choices more transparent and more real for the various segments that come into the site. But we're not there yet. We'll continually optimize and continually test and optimize based on the feedback our shoppers are giving. That's the most important part of our user experience, is taking the shopper feedback and using that to change not only our user experience, but also our processes. So who needs CoverHound going in the future? Well, basically any US consumer who's tired of being told to save money without true comparison shopping online, just like you experience on Amazon, Zappos, and Google today. Insurance carriers are also looking to work with us because they don't want to have to depend on the need to spend billions of dollars every year in advertising. And that's something I'll touch on a little later. And last but not least, the reason our platform is so unique is we have APIs built specifically for marketing partnerships. Those marketing partnerships can offer a seamless, integrated property and casualty insurance comparison shopping experience on their site or in their place of business, the point of purchase. So now I'm going to let Jeff come back up, and I know he had a few questions specific around some of our partnerships and
thank you for that. So from your perspective as a CEO of a startup, a digital disruptor, where do you think the market is headed? Where is the market going to be 3 years from now, and how will you fit in?
A perfect lead into the next slide.
Jeez, wow.
So the way we see the industry is there's definitely going to be more carrier consolidation. As referenced by the last 6 months, you've seen 2 of the largest deals in insurance history happen in the last 6 months. The one that concerns us the most is the rapid shift to mobile. As we're working with our Google Compare partnership and other partnerships on the web, we're seeing over 55% of our shoppers first engage with us with a mobile experience. And we have to be able to transact business within a smart device. A lot of these millennials don't have a PC where they can go back to and actually try to transact business with us. Next, we see even further emergence of the digital marketplace. So it's not just for auto insurance, home insurance, and renter's insurance like we offer today, but we expect to see this across life and several other product lines. The additional thing is one of the points you pointed out earlier is autonomous and semi-autonomous vehicles are going to disrupt a lot of things within the auto insurance space. Auto insurance is, of course, the gateway product to most insurance carriers. With that changing and that dynamic, they're going to have to figure out other products like home or renters or even umbrella to be the gateway product. The other thing we're seeing in the last 7 years is a decline in miles driven. This is a major stat. So the less people drive and the more a car can drive itself, the lower premiums are going to be. And we're also seeing more ride sharing. So welcome to San Francisco. You probably saw the cluster of traffic coming in today. That's why there's a lot of ride sharing going on in San Francisco, because the fewer cars, the more we can get around. The next thing you're going to see is more usage-based policies being sold. So usage-based insurance has slowly been emerging. It's still a hard product for consumers to understand, but we feel like with the right consumer experience digitally, that is something where we can communicate effectively. My favorite on the list, to be honest, especially after working in the insurance industry for over 20 years now, is a reduction in the number of TV ads you see for insurance. So the more consumers shift to on-demand content, the fewer ad impressions available for the big 6 advertisers in insurance. I'm a big fan of this because that's about $7 billion in TV ad spend per year that needs to go to something a little more useful than just telling you can save money and save time. That's what we're for. And then last but not least is one of the things I love that you pointed out earlier is the Internet of Things. We really feel like consumers and carriers alike will adopt Internet of Things because that a massive amount of data that comes with that is going to help underwriting and pricing.
Thank you for that. And so this year, Google has actually begun selling into the marketplace, selling insurance full throttle this year. And I understand that you guys actually have a partnership with Google. What can you share about that? I'm sure everyone's wondering.
Well, thanks to the NDAs from Google, we can't share a whole lot.
I tried, everyone. Sorry.
But I will toe the line a little bit and let you know that Google has been trying to build this product for 3 years, and they approached us in 2014 and asked if we would like to partner with them. We didn't want to power their complete experience, but what we are powering is 10 of the carriers available for California and then eventually for other states as they continue to roll out. So what we do for the carriers is we offer them a digital capability to fulfill online, to quote and fulfill online. Some of these carriers are direct carriers, and some of these carriers are independent agent-driven carriers. And that's the uniqueness of our platform, is we're very much like an Expedia and not like a Kayak. Because we don't sell leads, we don't sell clicks, and we don't sell phone calls because we're not a lead generator.
That's great. Well, thank you. Round of applause for Keith. Thank you. All right.